All right, guys, let's do it. Let's do it. All right, Santa Cruz. Okay, GV episode 3, part 3. The return of the Jedi. I don't know. This is probably the last podcast before everything goes crazy. And you saw in the first part the more speculative stocks. They were at the beginning of this insanity, and the one that are in GV's core positions, I've noticed, and we'll go through them. They're more advanced. They're kind of leading the way, kind of like what I said a little while back. That the really A++ setups will explode first, lead, and after that, when they're consolidating, maybe the other ones, then they start money starts flowing into the other more speculative stocks. But by the time that then those stocks start consolidating, the new ones are ready for a new explosion, and they're giving you more and more stronger gains. Because look at that. Let's say Santa Cruz weekly chart. You know what? Maybe I'm going to go on the monthly. Let's zoom out a little bit. We'll still see the progression. Look at that. Okay, here is the 1 year and 3 year bullish cross right down here above. Let me get my trend line out. Volume, fair value, high volume node right here. Strong Marubozu candle, breakout above horizontal resistance. Just beautiful. Higher lows. Man, above you can't go wrong here. Yes, it could break out. Some of the weaker stocks, they're going to come and pull back. Usually 1 to 3 months, you come and pull back and you test the breakout line. But some stocks, A++ setups, it's not guaranteed. So for those that always want just to position themselves on the pullback, well, that's the risk, and then you'll be chasing. So whatever strategy you have, some people that have they buy on the breakout no matter where it is, and if the pullback comes back close, they add, or else that's it. And then after that, if the pullback never comes back down, then it continues back up, and then you're in the green. Strong Ichimoku cloud, defined downtrend, red resistance, and look at that. It's trying to go through. Oh, wick, going back down, staying in it, trying to explode, and look at that, holding. The cloud's keeping it in. Super strong monthly defined Ichimoku cloud. And that is all been defined in the past, projected in the future. All these buyers here that got trapped on the way up, they want to bail. You know, human psychology. I'm broke even. I wasted 3 years of my life. It was dead money, all that, and then it's transferring hands. And the people who aren't burnt emotionally, they got in here or adding on here. For them, they've been in this trade for a few months, not 5-6 years. It's easy for them to weather the storm. Look, even gapped up, closed back in the cloud, and back in the cloud, close to 1 year moving average. This was probably the best opportunity of all time for Santa Cruz after this breakout consolidation pattern, close to that inclining 1 year moving average. Look at that now, huge Marubozu candle above the cloud. That's it. You're out of it. There's no more of this resistance. All these people, these bag holders, they're gone. So the early bird that was willing to risk maybe slowing down here, even if you had great gains. But right now, this is like the next leg up. Here is my breakout line right here. You're starting to define green Ichimoku cloud. So instead of resistance, now you're creating support. So eventually, that support is going to go up and up and up, that cloud. Then you're going to come and test it eventually, and it should help you. Look at this big pattern, Santa Cruz. Santa Cruz. Let's remove that. Oh boy. Oh boy, Patrick. So let's do some measured move type of things. Something like that. So here the Santa Cruz target. Yeah, it's going to go test those all-time highs. Click and drag. Click and drag. And when, Pat? When? I love using those vertical markers because you have the date outlined here. So whenever I do charts and you say, Pat, you didn't put the date when you think expected to reach target, look at the scale, time scale. And if you see a highlight here. That means I put a vertical line. So even if I didn't put the label, it's going to happen in January or January's close. Look at the time scale. So that is the month of January. So during January of 2022, Santa Cruz could be a 4-bagger from here, guys. Low risk entry was just last month when everybody hated silver, when my follower count was ridiculously low. That was probably the time, guys. Look at that vacuum. Maybe a little congestion around $1. A small vacuum node right there. But other than that, looks great, guys. Go gold. Go gold. That one has been on a tear. That's a log scale, guys. Log scale. And to maintain that angle of ascent on log scale is pretty impressive. Every time there was a pull, flag, pull, measure moves, they've been reached, it just blitzed through that Ichimoku cloud defined resistance. Try to go in here. No. But once it went through, it just went through butter. And now actually, look at that, consolidated below. I think I did my podcast in December. I was probably right around here. I was probably saying it was consolidating right below important breakout line. 1, 2, 3, 4. Let that moving average catch up, that 1-year moving average. Look at that one, decided to explode. Bam, just exploded. Now it's consolidating up here. There's so much power in this stock, guys. What is the next measure move? The next move, let's start over. Clean that. Look at that angle, man. It's just insane. To the moon. It's never going to stop. Wow. That's like, sometimes I look at that. It's just a trend. Until it breaks down from that, I know it gets harder and harder for that company. So I don't know. The price goes up, they have more money, then they buy more companies, all the fundamentals. Like, if you just look at the price, good price is going to create more possibilities to have better price. And look at that trend, just beautiful. And then you could do some implied measure moves, some targets. So as long as you don't close below the 1-year moving average, as long as you don't close below that trend line, and the valid trend line is three hits. But right now, this is just like for the main direction. You could estimate potential targets along the way. So let's say we think we're going to have a market pullback in 2023. Let's see. And if this continues on its wild ascent, see, this could be a target move right here. Angle of descent. Path, price action in the past, it doesn't matter. Why? Look at that. Went down. Usually I do it like that. Here is my base. Okay, right here. Oh, click and drag, Pat. Click and drag. Okay, here is my breakout. Didn't want to go out. Here broke out. So angle of descent. Patrick. Angle of exit. Not to perfection, but look at that. 50 degrees. So right here, once you break out of a base, it's perfect reverse symmetry here. Tested it, went back out, go in, went back out, tested it, and then exploded up. It's so beautiful. So right now, this is an uptrend, measure move. I guess we have to wait maybe to let silver, when we see silver slowing down, or we know it's peaked, and when the cycle is we're gonna have the midway cycle crash or consolidation, and then we'll see where we're at. So $8.83. If this trend continues, the measure move is just insane, guys, insane. So it could have some juice for a little later on to continue up. But uptrend above an inclining 1-year moving average, good things happen. Early bird gets the worm. So the ultimate entry was on that pullback here in March, and out of the cloud and out of this base here, consolidation above. Strong stock will not always come and test that breakout line, but if you ever bought here and it came back down, that would be to be expected, guys. Van Gold. Look at that downtrend. It sucks. It sucks. Don't want it. All right. Volume, defined base, fair value node. Look at Ichimoku Cloud, defined resistance, downtrend, 1 year, 3 year, 1 year, 3 year moving average. Bullish cross, first explosion out. Usually not the one that really goes vertical. Test it again. Bounce off that 1 year. That's a 3 year moving average. Look at that cloud, just the pressure, the monthly cloud, pressure, pushing it down. Oh, now that's it. Exhaustion, bottom, double bottom, back up. Now we have a bullish cross. So right here, that price action is what I call the bullish transition zone. It's when you're below a horizontal breakout line, important breakout line, and you're above an inclining, some bullish configuration. So those two tides, that 1 year, 3 year golden cross, you broke out of it, angled breakout line. So these are less precise, but they give you early entry points. And then after that, that's bullish transition zone in a bull market. That's a good place to enter. It's a good place to enter above a huge volume defined base. And look at that, you're starting to create some green inclining Ichimoku cloud. So the vapors have been reversed. And just like you saw in gold, the angle of entry will give you clues on angles of exit. Reverse symmetry, it's a mirror. It's voodoo pat. Does not make sense. So that's about it. Let's do where is that going to be? 2023. See some more targets that align with where we're expecting maybe in 2024 to have a low in the gold and silver. And right here, $19. Whoa, that thing's at 60 cents, man. Holy Moses. You could have some resistance right here. Previous resistance, and we're going to hit that maybe at 189. So a congestion area here, 189 to about $4. But still, man, that's a multi bagger for Vanguard. Looks beautiful. And even here at the angle, yeah, look at that angle of ascent, guys. Beautiful straight line. So those are the moves, guys, for Vanguard. That one looks sweet. ELO, wow, another beast. Another beast. Ichimoku cloud. So all those charts, man, always look at that. They always look, the cloud's trying to keep it in, not quite ready. But right now, look, it's trying to create a green cloud. Huge volume defined base, higher lows. And look at that angle, guys, those angles. Once you break out, hey, I selected you. 55. Whoa, man. That thing is going fast. So it's going even faster than. So is it going to slow down a little bit and then catch up? So the target right now would be about $6, $3.75 for ELO. Inclining 1 year moving average. See here, when you got really close that 1 year moving average, that was probably your low risk, high reward entry. And these last 3 months of consolidation have created the opportunities to get in. And that's the measured move, guys, for ELO. Pretty nice beast. So all the other charts that we saw on part 1 and part 2, the mid tiers or the smaller caps. Some of them are right here, right? Bullish cross. Some even they're down here and they look like they're awful. But for me, the potential firecrackers to get back above and explode. But this A++, see those pullbacks? Not much pullbacks right there, guys. But this one is getting close to a target, but it's still at $6, $6.25. KUYA. Oh man, I don't have a lot of data. I'm going to have to go down on the weekly. KUYA. Okay. volume defined base right here. This is the first one I see. So that still in the Ichimoku cloud defined resistance, exploded out, huge volume defined base, was able to get out of it, now creating green Ichimoku cloud. Huge base again. That base is almost as big as the bottom base. 10 week, 30 week moving average. Man, you've had a lot of weeks to be able to get in. Even here, $2, just above the 30-week moving average. See, it stayed above the 30-week moving average. So that was a great entry here. Here's another good one above a nice base. And once you break out above this consolidation area, this thing should fly. Something like that. And that target, pull, flag, pull, that target is going to bring you to create a bigger pattern. Patrick, click and drag, click and drag. You should know TradingView by now. So that's going to bring us to a target around June. Wow. June 2021. Okay, so let's see. Once it breaks out above here. So if it keeps going sideways, guys. Patrick, you said June. Well, until it breaks out, it's still, the pattern has to complete and break out. These are all potential patterns, right? Like here it broke out. Right here, this candle right here out of this base. That was a confirmed weekly defined breakout of that. So until this, we break out here. This, the measured move, the angle is still the same, but you just scale it out. So instead of being target in July, it could be end of July, August. So right now, KUYA is sitting at 259. The target is about 480. And after that, could probably overshoot to go try to test that resistance. Like Shizm says, the price action is always searching to test something or retest something. And then you'll get a huge pattern. Then we'll see what happens with KUYA, guys. But here's a vacuum. No volume defined resistance. Just need this consolidation. The more it gets tight, the closer it gets that inclining 30-week moving average. It's going to be squeezed upwards, especially in a precious metals bull era. Vanguard. What are we dealing with? Let's go on the monthly. Ichimoku Cloud monthly. Okay. Okay, so here it's clear that we had a monthly defined breakout. Retest. You see 1, 2, 3. 4 months later, retested that breakout line. The dip below the wick is noise from smaller time frames. Inclining 1 year moving average. Perfect confluence of support right here. And then you have a white candle just bouncing off. Just classic stuff. Huge volume defined base. Starting to create green Ichimoku cloud defined uptrend. Very nice. So if you want to do some, have fun with some measured moves. So whenever the pattern breaks out, guys, see, I could put the angle of ascent here, and then you say, Patrick, you said in November Q3 we're gonna have a $5 target. Jesus, for defiance. Well, until it breaks out, this thing could scoot over a little bit. But considering it's really tight on its 1 year moving average, it's its first pullback out of its important base after the bullish cross of that 1 year and 3 year moving average. This is a good time as any to low risk, high reward entry, especially that the price has shown that it was ready to bounce up, guys. So that is pretty sweet, man. Just gonna put the marker here. So that's the target. Some pretty strong move for Defiance. Now 72 cents and targeting 540, 550 sometime this year, man. That's good. That's crazy, Pat. You can't do that. Cannot do that. ABRA. Man, ABRA. Bullish cross. 1 year, 3 year. Consolidation. Let the 3 year moving average, 1 year moving average catch up. Consolidate. Broke out again here. Consolidating. Best risk to reward entry. Just happened. All right. And letting the price action catch up to the 1 year moving average. And look what it's doing now. It is. You always want to find clues of bullish price action. No paralysis analysis. Really try to figure out what is we've seen in the past. That is good clues. That's healthy uptrend. And this is it, man. So right now, even here, I could lower that line a little bit. Beautiful consolidation, 1, 2, 3 months. It just exploded out. So 59 cents. Here's my inclining move. So let's say the bull flag right here. Measure it. I'll try not to be greedy. And here I have a $2.50 target for ABRA. When right here in July, January, February, March, Q1, April, May, June, Q2, Q3, guys. So ABRA should have an insane move Q3 after this consolidation. Very, very healthy, not stretched at all, and they're ready to continue its explosion, guys. All right, last one, AYA gold and silver. Let's take a zoom out. Huge base right here. Look at that grueling consolidation right here. It wasn't quite ready. So in 2018, actually broke out. And in the weight of evidence, that's when you see that you need the whole precious metals market to go full steam ahead to really get all the chances of capital flows leaving U.S. equities to go into precious metals. It didn't quite have it then, but it showed signs that it wanted to. So grueling sideways grind right here. Everybody thinks it's the end of the world. March drop. This is going nowhere. But no, that's actually carving out a higher low out of the cloud, creating green Ichimoku cloud defined support, green Ichimoku cloud defined uptrend. Bullish cross right here once again. 1 in 3 year. And right here, beautiful breakout out of this new pattern. Exploded, tested, exploded. And this thing is just off to the races, guys. So it's kind of hard. How am I going to measure this? The easiest thing to do with when the stocks don't have clear measure moves is just play it Stan Weinstein style. So here I have even, let's say, a $10 target. So it's at 640, maybe 12. So here I'm going to show you Stan Weinstein how to do it. So it goes on the weekly chart, 30-week moving average. As long as you're above the 30-week moving average and you're outperforming the index you're in, so let's say SILJ, you always want to perform silver junior miners above an inclining 30-week moving average, you just write it. See, just like it did in 2016, outperforming above an inclining 30-week moving average. And until it starts faltering below, then you know to trim, to take profits off. And now it's just, it has been outperforming SILJ for a while, since the beginning of this, in even in September. So as long as it's above, if it ever gets close to 30-week moving average, then you get an entry spot. But until then, you just hold on until the stock's ready to falter, guys. So that's it for my review. Don't forget to go follow me on Twitter, subscribe to the YouTube channel, check out Silver Chartist. I have my link. I'll put in the description. I always post some exclusive charts there. And me and Kevin Northstar, we have a masterclass going on. Go on badcharts.com/masterclass and go check that out. All right, guys. Thank you. Ciao.